Well, good evening, everybody. Our last personal money management class for the spring term. Congratulations. Another one bites the dust for you guys. Good job. This is the 9th week of our quarantine in Southern California. And it looks like of the events of this week, this is going to go on a little bit more. So fun to that. Also, for many of you, in a couple weeks, you'll be starting off your summer term taking courses at the University of Laverne, and many of you, as you already know, will be having that online. So take the experience from this class and use it in the next class. The professor has an option of using Zoom or WebEx. I've used Zoom in this class, but both are about the same. So as you move forward into your summer classes, if you need any help or any guidance in that line, and please feel for somebody to turn off their mic. If you need any help or guidance, I can take care of this. Boom. There we go. If you need any help or guidance in your as you go forward, Veronica, I can see your forehead. Fix your camera. There you go. That's the pretty face. As you need any guidance going forward into the summer or any additional classes, please feel free to call on me. You have my email address. You have my cell phone number. Feel free to keep in touch with me if you have any issues or any questions in regards to finance, in regards to your program at Laverne or anything else. Please feel free to keep that network going as we go into the future after tonight's class. As I said earlier, this is our last class of this spring term. I have posted your grades for the Wolf of Wall Street posting of your portfolio discussion forum. I do have a winner this evening of our Wolf of Wall Street, and we'll be awarding that later on tonight. We do have a Wolf of Wall Street, and it certainly is not Mr. Hassey. You guys, every student beat me. Every student beat me. How about that? That's not very impressive from my point of view. It hurts the ego a little bit, but it says a little bit about you guys and how you picked your portfolio for the first time getting into it in this class. I think that's pretty good. So Professor Hassey is the meow cat of Wall Street, not the Wolf of Wall Street. He came in last. Good Lord. All right, but so we'll talk about that in a few minutes about that and your final and your grades for that. You have one more grade remaining, and that is your course paper that you selected a topic. I would like that posted today. Many of you have already posted it. If you have not done it today, some of you have already talked to me. Just post it over the weekend. The reason for that is I'd like to post your final course grade next Monday. I'd like to get all the grades completed this weekend and organized and posted to your Blackboard by Monday. So if you have any issues with that, please go to the Grade Center this weekend and review your grades. Make sure you understand where you stand. And also this weekend, fill out your course evaluation, because come on Monday, I will begin to put down breaks on the various course grading of your grade center. I'm not saying this very well, but and again, if you do not fill out your course evaluation, you won't have access to see your course grade. You'll see all your other grades, but you will not see your course grade. If you fill out your evaluation over the weekend or into next week, I will release your course grade to you. Your evaluation, as I said earlier, has nothing to do with your grade. It's just a convenience and some information for us to review about your feelings of this course. Yours truly, your professor, and anything else that has to do with your studies this spring. So post your final paper this weekend. I will do the grades. Take a couple moments of your time and go to your My Laverne or use the link in the email that was sent to you. If you do not have that link and need help finding that link, you let me know. Do your evaluation, and then I will post your course grade next Monday, and you move on to bigger and better things down the road. So that's the plan for this weekend. That's the plan for the final stages of our personal money management class here in the CAPA program. Today's discussion, taxation. We're going to talk a little bit about taxation. I'm sure almost all of you know this in regards to taxation. Your paycheck, right? Your paycheck. We see it. We see it every day or every 2 weeks, every month, every week. Your paycheck. This is this is our main experience with the taxation system of being a United States citizen. Excuse me, I shouldn't even say being a United States citizen. You don't have to be a United States citizen to pay taxes. You can just be working in the United States to pay taxes. Excuse me. So that's most of our experience with taxes, is the paycheck. And we're going to walk through this a little bit. But also another example of our experience with taxes is the paying of our filing of our tax return. Now, this year we have a little bit different circumstances. If this was a normal year, we would have already filed our income taxes, both in the state and the federal taxes. But because of the coronavirus and the change in some of our ways we do things in our own personal financial lives, the tax system has delayed filing returns until July 15th. Many of you probably have already filed your return. Professor Hassey has not. Anytime I can wait as long as possible to pay the federal government, I'm going to wait. So July 15th is a due, and this is the main numbers of filing a tax return. We have to file 2 tax returns if we are employed and earn income in the United States. We have to file a federal return, and we'll talk about this tax schedule on the federal return in just a minute. And then we have to file state and local taxes. State taxes are income taxes by the state, and guess what? We live in the highest income tax state in the country. Boy, surprising. California has the highest state income tax rate of 13.3%. So if you make over $500,000 a year, you're paying 50% in tax in the state of California. I'm moving to Nevada. Why do I want to move to Nevada? Because in Nevada is one of the 7 states in America that you do not pay or have to file a state tax return. Florida, Alaska, Wyoming, Washington, Texas, South Dakota. I still wouldn't move to South Dakota, and Nevada, okay? Those are the 7 states where there's no state income tax. So all you have to do is file a federal return there, no state tax. Veronica, good question. Why is it that 7 states do not have state income tax? Well, it depends on each state. In Alaska, most of their state income comes from oil. So they don't need to tax people in Alaska, it's oil. In the state of Florida, most of the people, and I shouldn't say any more, but primarily a lot of people who live in Florida are retired. They're retired people who live in Florida. So they don't have the income or the necessity to file tax. So Florida says, oh, why don't you come to live in our state and you don't have to pay state tax. Now we're going to get you in property taxes. We're going to get you in sales taxes, but you don't have to pay an income tax. That's why most of the professional athletes in America, who are now unemployed, by the way, the NBA, NHL, Major League Baseball, NFL, most of those players live in either Florida, Texas, or Nevada. Why? Because they don't have to pay federal or state tax there. That's where a lot of people choose to live, especially if they're in professions where they have to travel a lot. Other states, like the state of Washington, it's a cultural thing. It's a social thing. State of Washington likes to be a little bit different from everybody else. So they say, all right, you don't have to pay tax here. Texas, again, they like to be different from everybody else. I really think, and I've been associated with Texas for decades, working, knowing people who live there, dealing with people who work there. Texas thinks of themselves as another country. They really do. Texas says, the hell with all the rest of you. Texas, we're going to do it our way. For good or bad, either way. But that's how Texas feels. They feel, we're going to do it our own way. The same thing in South Dakota. And also in South Dakota, a lot of businesses there are financial, oil, and they have other sources of corporate tax there. So they don't have state income tax. Nevada, that's obvious. How many times have we added to the state tax coffers of Nevada when we go to Las Vegas to bet and play a little gaming? So there's gaming in Nevada, so thus no state income tax. And also they encourage people to live in those states because they can bring in their money and not get taxed on it. That's kind of an interesting thing. Why does California have the highest state income tax? Well, I think for a variety of reasons. Number one, California, for lack of a better term, and I hope I don't offend anybody by this because I've lived in California for 35 years. California is the land of fruits and nuts. California is the land where equality, diversity is part of our culture. California wants to take care of all their citizens. California wants to have the best university system. They don't. California wants to have the best public education system. They used to. California wants to have the best roads. California, if it were a country, would be the 6th largest economy in the world. Just California. Because of that, it's expensive to run. Regulations. Lots of just the state employment tax department is bigger than most states in the rest of part of the country. More people work there. Health departments. California has a lot of regulations. California wants to encourage, and the state spends on developing businesses. How do you think Apple, Cisco, Facebook, all these companies, why are they corporate headquarters in California? Because California encourages them to come to work here with tax breaks, investment, quality employment, employees, quality labor. That's expensive. What's quality labor? Good school systems, good colleges, good universities. That's expensive. So Jacob, I think that's pretty well why California has the most expensive, highest taxes, because we're the largest state, we're the richest state, but we want to take care of everybody. We want to have the best, and that's why. The state with the lowest tax rate is Alabama. Okay. Visit Alabama and you'll know why. Okay. They don't want to. There's just not as much wealth in Alabama. Not many corporations are centered in Alabama. So they have a lower tax rate. So it's relative to the culture, relative to the type of business, okay? So that's an important thing to know. And also, besides state income taxes, you have local taxes. What do you mean, Mr. Hassey? What do you mean by local taxes? Property taxes, right? Property taxes. You own a home in California, you own real estate in California, you pay property taxes. Where do your property taxes go to? Your local schools. Your local schools, property taxes. Sales tax rates in California are very high. Where do sales taxes go to? The governments. That runs our city and county governments, sales taxes. All right. If when you have sales taxes in the city of Laverne, the city of San Dimas, the city of Claremont, and you buy products in those cities, the sales tax revenue goes to supplement running the civil government. So federal, state, local with property taxes, sales taxes, somebody's got their hands in your pocket at all times. All right, at all times. But that's part of financial planning. If you choose to live in America and you want the benefits of living in America, safety, both at home and from foreign intrusion. You want regulations, diversity, safety in regards to public health. That's a stretch these days, and other things. You have to pay for it. And that's why our taxes are very high. And now they're even higher in some countries. In Europe, taxes are up to 50, 60%, if you can believe it. But they're expensive. And living in California, you pay the most taxes of anybody else in the country, combined with federal and state and property taxes. Property taxes aren't cheap here either. So it's not a very exciting topic to talk about. But it's a topic that if you want to manage your money and you want to make sure that you have money to spend after you pay taxes, there are certain ways you go about deferring taxes, not hiding or cheating, but making sure you understand your tax bracket, what's deductible, the area you live in. I live in Claremont. I pay 9.5% sales tax in Claremont. I drive a half a mile, I'm in Upland. In Upland, it's 8.75% sales tax. Now, for some of us, that's not that big of a deal. But if you're a company, if you buy a lot of stuff, being able to go to Upland and San Bernardino County can save you a few bucks. And that's something you should know about. And also some of you should know about maybe down the road as you get your degree and you become looking more in the market for jobs, you might think about living in states that are cheaper to live in. Taxation. But again, taxes drive some of our decisions in managing our money. And before you can start determining those strategies of managing your money, you should understand the taxation of where you live, the state you live, the local taxes where you live, property taxes, sales taxes, and the federal taxes. All right. In America, most of us make right here. This is where most of us fall. Most of the taxpayers in America are in the roughly $39,000 to $84,000 a year adjustable income. That's where most of us stand. We pay in the new tax laws 22%, depending how we file. If we're single, if we're married but file jointly, file together. If we're married, file separately, or we're the head of the household. Each one of these drive, but basically, most of us are in about the 22% tax bracket. A few years ago, that was as high as 29%. But with the tax law changes by President Trump in 2016 and subsequent changes, it's been lowered to 22%. But at the same time, we cannot deduct as many expenses anymore on our taxes. We have to pay a flat deduction. But roughly speaking, so if you live in California, you're paying 22% to the to the feds. You're paying 13% to the state of California. So now we're up to 35%. And then with your local sales taxes, property taxes, when you get it all said and done, roughly about 40% of your income goes in some way, shape, or form to the government. Now, this gets a lot of people concerned, especially when they see the government having a difficult time making decisions and working together. That's a big deal. So one of the key things going on in America today is the struggle between people who have to pay and pay a lot of taxes, and at the same time, are they getting their value out of paying those taxes? Are you getting services? Are you getting help? Well, it's an election year this year. And guess what? You got $1,200 a couple months ago or a month ago from the federal government. You're getting extensions on your tax filing. You're getting more, there's going to be another stimulus package probably coming down the pike later on this spring or summer. The government wants to keep you somewhat satisfied in what you're getting value, so they're giving you breaks. They're showing that they're doing their job. At the same time, the government now has quadrupled the amount of debt that you and your children are going to have to pay back over the next 20 to 30 years. How do you pay that back? Taxation. So it's an ever evolving circle. But you should be aware of this. Good or bad, you should be aware of that. And that's an important thing to know. Spend a little time on understanding the basics of how you are taxed. Just don't let those tax softwares, programs do your taxes. They help you, yes, but understand where does your money go? And again, as I said earlier, the first area of that is you should understand your paycheck. You'd be amazed how many people get paid every week or every 2 weeks and they have no idea what the hell all this stuff means. That's a big deal. You should take the time or find the answers with your HR department of understanding where your taxes and where your money goes. You make a good salary or a decent salary. 30% of it is gone by the time you get your paycheck. You cash it and put it in the bank. Where is all this money going? So the first thing I'm going to do tonight is let's make sure we understand. Now, this is a typical University of Laverne paycheck. The names have been blocked out to protect the innocent. And then also it's a few years old, but basically the paycheck hasn't changed much in the last few years. And the first thing you got to understand is what is all this money? What is it? Well, first of all, the government in 1934 passed a law to help you once you decide to retire, that you will have an income when you retire. Not a huge income that you can actually live off of, but a supplemental income to help you. Because guess what? Not too many of us are good savers. Not too many of us put money aside because we're too busy taking care of our families. We're too busy managing our money, borrowing money, paying it back, whatever. So the government has what is called FICA, Social Security and Medicare. Social Security is roughly 6.75%, something along that way, of your paycheck goes into the Social Security Administration fund and is invested at currently the investment rate is 2.5%. And that is saved for you until you become eligible for Social Security benefits at 62 years of age. That has increased in the last year to now, in another year or so, you cannot get that money until you're 66 years of age. Depends on when you were born. But that's Social Security. Now, your employer matches that. So in this paycheck, notice I'm putting $221.60 of my pay into Social Security. If I worked for the University of Laverne, the University of Laverne would write a check to the Social Security Administration for $221.60 as well. They're matching that amount. Not a bad deal, really. Then you have what is called Social Security or FICA Medicare. That's putting money aside to the federal government. So when you turn 62, 65, 66, whatever, it's 65 now. When you turn 65, you get a little card that says you now can go and take that to a hospital and a doctor, and the government will pay your health insurance. Now, Medicare is set up where you can purchase additional health insurance. Should you have specific health issues, you have to purchase what is called Medicare B. But Medicare A, you don't have to pay to go visit a doctor. You don't have to pay for certain things. So that's Medicare. So when you retire, you don't have to worry about staying on your Blue Cross plan at your employer, which is very expensive. The government will start picking up the tab for your health insurance. Then the next line on this is your federal income tax. This is usually the greatest amount of any paycheck, $390.62 in this paycheck. What is that? That's going towards that 22%. that's in our tax bracket. That's where that withholding money is going. It's going to pay that in advance. Then at the end of the year, you account for it all by filing your tax return. And if you paid more than 22% of your withholdings during the year, you'll get a refund. If you didn't pay 22% of your withholdings during the year, you have to pay an additional amount when you file your tax return. It's as simple as that. So most of us try to kind of balance it a little bit by determining how much tax is going to be paid out of every paycheck. How do we do that? We fill out a deduction form, right? A deduction form. Single, 0. Single, 1. Married, 0. However you file your tax return, you should file that. But you can get in some difficulties if you're in a family where there's more than 2 wage earners. If you have more than 2 wage earners, you're going to probably owe a lot more tax. So you got to watch out how you withhold when you have 2 wage earners. It's pretty easy to figure out, and your HR office can help you with this, but you can calculate yourself. Total up the income that both of you are, how much money you're making over a course of a year. You know your salary. Take out the standard deduction, which is roughly $10,500. That's your taxable income. Take 22% of that, divide it by the number of paychecks you have in a year. That's how much you should be withholding. Now, wait a minute, Mr. Hassey, that's an awful lot of money. I need some spending money. Okay, so you're making the decision to withhold less and then making that up later on in the form of you're going to pay when you file your tax return. That's how it works. That's how the federal tax is taken out at 22%. Remember back here, we saw it earlier. If you're in this income bracket, you're paying 22% of your income to Donald Trump and company. So that's where that comes from. Same thing in the state of California. California withholding tax, that goes to that state tax. In California, that's 13% of your income. That goes towards that. Same thing, it's based on withholdings. Those are the taxes we in the state of California have to pay on our paycheck. Social Security, Medicare, federal withholding, state withholding, and the last one in California is called disability insurance, SDI. It's 0.001 of your paycheck, 0.1%. $32.16 is not too much, but what that goes for, if you live in the state of California and you become disabled on your job, you can get still a paycheck. It's insurance. Now, depending on the disability, depending on your job, that disability lasts for anywhere from 18 months to 3 years. At the end of those time periods, that's the end of that. If you don't have supplement disability insurance, no more income. And that's why a lot of us, if we're in high dangerous jobs, if we work construction, if we do jobs where we can get injured, most of us have supplemental. You guys ever see those stupid dopey commercials with the Aflac and the dumb duck? Aflac, Aflac, and the duck? That's supplemental disability insurance. If you're in a high risk job, you might want to get Aflac. Okay? That's where they make their money. They give on supplemental either health insurance or disability insurance. And some of us get that if we're in a high risk job. Okay? So that's SDI insurance. You have to pay that if you're employed by the state of California. Other states, Nevada doesn't have that. So those are the taxes you pay out of your paycheck. The rest of these things are what you volunteer to pay these. They're right here. HMO, that's health insurance. That's my share of, this is not my paycheck. Why do I keep saying my and I? This is this employee's share of health insurance. This is eye insurance, eye doctor. This is setting money aside in what is called a health insurance money. If any of you have through your employer, you can put money aside and they give you a little debit card. And that debit card is money that you've paid into that can go to pay for dental, other health expenses. And that's where that is. Life insurance. You can get life insurance from many of your employers. This is long-term disability. If you become disabled for more than 3 years, I'm paying extra to have long-term disability insurance. This is retirement. A 403, and if you were working for a public corporation, this would be a 401k. This University of Laverne is a not-for-profit, so it's called a 403b. Better, it's retirement. This is retirement, Social Security, and this is retirement. This is putting aside into a pension fund. And then finally, parking. Parking. Or you have all different types of things. Some people put money into like a Christmas club. Some people put money aside for some employers pay for daycare, and they might charge you a little bit for employee daycare of children. All different other kinds. But the big ones out of a paycheck, Social Security, federal withholding, state withholding. That's the taxes we pay. But if you should look at your paycheck and you should understand what's going on there. And if I always take a look at my paycheck every quarter, even though I know exactly nothing changes. But every now and then, like last quarter, my paycheck changed. Why? The tax law changed, and I took about $3 more home on my paycheck. I paid attention to that because the first thing I noticed is, hey, my federal withholding went down. My pay is the same. Why did that go down? The government changed the withholding tax. So you should make sure you understand what goes on in your paycheck. Okay? That's a big deal. That's personal management right there. Understanding where all this money goes and what value are you getting out of that. Social Security and Medicare, the value is about 40 years down the line. Federal and state taxes, the value is today. What services are the government performing for you to be a wage earner as a citizen of America? So these are important things that you should take into account in personal management. Is one of the first thing is, where's all my money going? And do I understand that? And if I don't understand it, ask people, usually your HR office. Or, you know what, guys, if you're getting the big stall, send Mr. Hassey a text. Mr. Hassey, I got this on my paycheck. What the hell is it? I'll tell you what it is. So make sure you understand what goes on in a paycheck. And it's all driven by these tax tables that we talked about earlier. That's an important thing of personal financial management. It's something that a lot of us don't like to think about and talk about and understand. But if you understand where your money is going, the first place is what's being taken out of every one of your paychecks. And that's important. Any questions on taxation, paychecks, things that bother you, things that you don't understand? Anybody have a question at the top of their head they might have that always is one of the mysteries of taxation or the mysteries of paychecks or withholdings? You guys are smart. You know what's going on. You know what's on your paychecks. That's good. For example, right now, the University of Laverne is in it. We're now in a period where you can choose your next type of health insurance beginning September 1st. So now we have open enrollment. And I'm sure a lot of you work for companies. Every now and then you have open enrollment periods when you can change your health insurance. You can change your plan. Well, part of that has to do with money being withheld from your paycheck. That's how you pay into health insurance. So you have to be aware of that. A lot of people right now are changing health plans because they're not making any money. They're changing health plans. Cobra, if anyone ever heard of Cobra? Cobra is when you leave employment, you're entitled by law to have their health insurance for, I believe it's 18 months or 15 months, something like that. But here's the bad thing. You got to pay both your share and your employer's share. All right? It's like $1,000 a month, probably even more for some people. That's a lot of money, but you have an entitlement that You can get Cobra. That's one of the reasons, and this is going to get political, so I'm not going to get too much into it, but that's one of the reasons why there's Obamacare, United States sponsored health insurance, Obamacare. Now, a lot of people get all hyper about this, but for people who lose their job, people who have children who need medical attention, Obamacare is health insurance, and it's needed by a lot of people. A lot of people who complain about Obamacare make $10 million a year. No, they don't care. They don't have to go out and find health insurance to take care of their family. Obamacare gives people the opportunity to get some type of health insurance at a reasonable price. The reason why the Republicans don't like it, because the corporations and companies pay into Obamacare when it's not even hardly their employees. They don't like that. It's like another tax. Well, welcome to America. We got to take care of everybody, not just the rich. All right, that's the end of my political comments for today, because I'll get in big trouble if I keep on going on that topic. Okay, so that's taxation that we're used to, mainly from the paycheck, mainly from day-to-day activities. But again, another big part of taxation is our tax returns. The filing of tax returns in normal times, every April 15th. The filing of tax returns. Let's take a look at that. Jacob asks, which states don't have property taxes? Jake, I can honestly tell you all 50 states have property taxes. Why? They got to pay for their schools. You know, the federal government and the state governments put some money into your schools, but most of school funding comes from property taxation. That's where it comes from. So you got to have, so every state has property taxes. Got to. When you guys pay rent on an apartment, you're paying property taxes, because a part of that rent on your apartment, the landlord is paying property taxes on his or her properties. You gotta think about that. If, for example, I own some properties that I rent out, I only increase my rent to my tenants when my property tax rates go up. I don't increase them at any more other times. But when my property taxes go up by the state or the county or wherever I live, wherever the properties are, I raise them appropriately to match, and so the rental goes up to cover some of those property tax increases. Everything else stays the same. But that's why when you get a rent increase, usually the property taxes have changed on the property. So that's why. And that's something to know too, especially if any of you are going to become landowners and have investments in real estate. You have to be aware of property. There's a big deal going on here. I live in Claremont. Many businesses are closed last year. Not only closing now, but closed last year, because many of the landlords raised the rentals on the buildings that many companies did business in. They didn't raise them because the property taxes went up. They raised them because they got greedy. And then a lot of businesses closed. And that caused a lot of problems here in Claremont. So that's something to know about too. So let's bring up this discussion. Here we go. I'm going to take a drink of water here. So as we said earlier, taxation is, there's somebody always have their hand in one of our back pockets. Feds, state, local, somebody. You go to the grocery store. On some of those items in the grocery store, you're paying sales taxes. You buy a new car, sales tax. So every transaction we do, there's something involved with taxation. So we need to understand and plan for that strategy about what are our tax laws, what's in our paycheck, what decisions are influenced by the tax. That's an important thing. As I just said, there's taxes on the purchases of something. It's called sales tax. There's taxes on property taxes. There's taxes on wealth, federal and state estate and inheritance taxes. There's taxes on income tax and Social Security. Gee whiz. Tax, tax, tax. Welcome to the world. We just have to understand that and understand our share of it. And here's how you change taxation. You vote. You vote. You vote. If you don't like your tax system, pick a candidate that thinks the way you do. That could be a stretch. And you vote for that person. If you don't vote, you can't change the taxation. You know, one of the most interesting things that I've done and learned over my lifetime is we have more control over our own individual taxation locally than we do with the federal taxation, or even with Sacramento or the state. But you can lobby as a citizen of a city. Go to a city council meeting. Go to your school board meeting. You can also press for changes in the tax law for those types of taxes. It's an important thing to know. We've talked about this throughout our class. You need a good record keeping system if you're going to keep track of all this. Keep your tax records. Most of our records now are digital. Most of us have direct deposit, don't we? And at the end of the year, we get a digital W-2 form. Make sure you keep records of those. Know where they are. Keep receipts of debt, payments, receipts for medical. Keep receipts if you donate some of your money to a charity. Keep receipts. So part of tax planning is just keeping records. And a lot of it now is that is digitally, but you need to keep record. As I said earlier, you can simply determine your tax liability. Now, it's not as complicated as this, but you can determine what basically every year you start out January. Well, what am I going to get paid this year? What's my salary going to be? All right, you can determine that. You less out deductions, your itemized deductions, or your standard deductions, which basically you should. Standard deductions, I believe it's $12,000 for most of us now. And then you end up with your taxable income. Then you can go to your tax schedule and determine how much tax you're going to pay on that taxable income. Your taxable income is your income adjusted to the standard deduction. That's how much the base of your tax. When I showed you that chart earlier of taxation, the percentages, that's your taxable income rate. You can calculate that out for you. The tax form. I'm not going to spend much time on this, but this is how you show the state and the feds a summary of your activity for the year, and it's summarized by determining your tax liability. You match that tax liability to how much was withheld, and you either pay or get a refund. We talked about state taxes. Tax strategies. Now, you can spend a lot of time on this and pay a lot of money to some Yahoo consultant who can help you on this, or financial planner. But basically, tax strategy are, if you anticipate your income going up, your taxes are going to go up. So what are you going to do about it? Are you going to withhold more, or you're going to keep your withholdings and just write a check at the end of the year when you file a return? Are you going to put some of your money in tax deferred investments? We've talked about it here in class. IRAs, individual retirement accounts. When you put money into an IRA, you're reducing your tax liability for that current year. You're taking that money and saying, okay, I'm going to designate that into an investment. You will not have to pay tax on that income that you're putting into that IRA. That's tax planning. That's the simplest form. The next area of tax planning is buying into an investment like a mutual fund that invests in tax-exempt securities. A municipal bond fund. You invest in a municipal bond fund, the income off that fund is tax-free. You don't pay tax on it. Or if you have an ugly tax bill and you don't like it, you move to one of those 7 states. I highly do not recommend moving to South Dakota. Why? It's below zero 3 months out of the year in South Dakota. But you'd be surprised, a lot of people, they get to a certain income, a certain situation, they move. And where do they move to? Nevada, Texas, Florida, warm weather states where there's no income tax. You have to pay federal tax, but no income tax. So this is part of tax strategy. But the basic is, if you're going to earn more income in 2020, which most of us are not, but if you are, you have to accept that you're going to pay more tax. Well, how are you going to do that? You're going to pay tax more of that tax by changing your deductions? Or are you just going to say, nah, I'm going to write a check on April 15th? That's tax planning. Another big tax strategy is buy a home. But a lot of us can't do that. Buy a home. Invest in assets that give you tax shelters. Invest in investments like a mortgage. What's the tax? Yeah, when you own a home, you have to pay property tax now. But at the same time, you can deduct that property tax on certain tax returns, state of California, and also you can deduct the interest you pay on that tax, on that debt, excuse me. This will reduce your taxable income. Remember, any deduction that you have reduces the amount of taxable income you have. All right, so buying a home is one of the largest ways that you can stash the cash, hide it from the government. But you live in the state of California, it's tough to come up with the dinero to buy a house. But that's part of tax strategy. You really you're starting to make more income, buy a home. Buy a home. That's tax strategy. So those are key strategies. I think the biggest ones here that we talked about for this type of class, and it gets a little bit more sophisticated, and that's why you would take tax planning or some type of tax strategy class. As a matter of fact, there is a tax class here at the University of Laverne. The two main strategies are, A, if your income goes up, how are you going to pay that additional tax? Or are you going to find different ways of reducing that tax by investing in an IRA, investing in tax-exempt securities, or taking more money out of your withholdings? And number two, if you get to the point where you're sick and tired of taxes and you need more deductions, buy a home. Buy a home. Now, if you buy more than one home, you can only live in one of them and take those tax advantages. But if you buy a second home and treat it and rent it out to other people, that's a business. You have additional income tax on the rental income, but you can use as a deduction depreciation on that property, the interest on the debt of that property, the maintenance and upkeep on that property is all deductible. So that's where a second home or income can give you more deductions. Yes, you're going to have to pay tax on that rental income, but you're getting a whole lot of new deductions on the investment in real estate. And then you got to manage that. Yes, your property taxes will go up too, but you've got a lot more deductions. That's something to think about as you go on in your life and develop strategies. Victoria asks, and this is a good question, will mortgages go down or up once the pandemic is over? Well, I have a feeling mortgages are not going to go up that much. I think real estate will take a little bit of hit in the pandemic. I think people will be out of work. I think real estate prices will drop in many areas, not drastically like 2008, but they will drop. So that means that, and also interest rates are so friggin' cheap, and they're going to keep being cheap for many, at least into the next year, way into next year. I think mortgages will be priced about pretty much the same, maybe even a little cheaper because real estate prices are going down. Now, again, it depends where you live, but we're not talking Beverly Hills here, but we're talking San Bernardino County, Riverside County, even Orange County, even the this side of the LA County, west side, forget it, but this side, San Gabriel Valley, I think real estate will not go up dramatically. I think it will be fairly consistent, constant, and in some pockets even go down. And again, it depends where you live, depends where you're looking. So Victoria, to answer your questions, I don't think the mortgages will go too up in the future. I think because of supply and demand, they'll probably be about the same, maybe even a bit lower because, well, I should say that. I would say they stay the same because they're going to be a little bit lower because of interest rates, but a lot of people's credit ratings are going to take a hit by this pandemic, right? Your credit, your FICO scores are going to change, right? Especially if you have credit card balances. If you don't have any credit card balances, you don't have to worry too much about FICO. But if you have credit card balances and you're purchasing where you're losing some income and using those credit cards to purchase, your FICO is going to take a hit. If your FICO takes a hit, that means your interest rates are going to be higher. So that's something you have to consider. All right. But again, these are all part of the strategy. These are all part of the plan. If you know your numbers, you know your tax rate, you have a head start on figuring all this out. Looking into the future, can I buy a home? Should I make an investment in an IRA? Should I buy into a mutual fund that invests in municipal bonds? Looking for tax shelters. And what's the biggest tax shelter you can have? You move to Nevada. You move to Texas. But trust me, if you all move to Texas, please keep your sense of humor. Texans take things a little bit too seriously. They think they own the world. So let's relax there. Okay. Anybody have any questions on tax strategies? I mean, we could teach a whole course on this. Trust me. I could go off for hours on this subject. But I think this is the basics that we're covering in this class. And if you're interested on learning more about taxation, there's I can refer you to a lot of good publications and books that you can read and study. But also there's so much information on the internet that you can use to track real estate prices. What's that one I track all the time? Zillow. Anybody ever hear of Zillow? Zillow is a real estate place. And the cool thing about that is you say, oh, I want to find out, give me the housing prices in Upland. So you put in a couple of zip codes, and then they will tell you if whatever your credit rating is, they can tell you what a mortgage would be if you in that area. They would give you the actual mortgage calculation based on the properties, based on your credit, based on the current interest rates in the market. They can give you a pretty good idea what your mortgage will be. They can even tell you what the property taxes are on that property. So there's a lot of information. Zillow is one. There's a couple others, and I can't remember off the top of my head. But those it can help you. Not even if you're not even thinking about buying a home. I use Zillow just to get a feel what's going on in the market around me. What's going on in Claremont? What's going on in San Dimas? What's going on in Orange County? Places where I do business or have clients or talk about things. It gives me a feeling what's happening to the real estate in the area. And that's where so there's a lot of information in the internet that can help you manage your taxes. Yes, financial planners are good. Yes, accountants are good. But yes, they're expensive. You're learning just as much in this class, and if you do now you take upon yourself to start reading about a little bit about stuff and using the internet, you don't need a financial planner. You don't need that. Now, again, if you have complicated income and complicated things like multiple assets, yeah, that's probably advisable. But based on, I don't need a financial planner. I don't need I have a CPA when I was in business, but I don't need a CPA to do my taxes. I don't need somebody to tell me what to do. I keep abreast. I understand the basics about what's happening. So you can do that too. Any other questions on taxation? I hate taxes, but it's a necessary evil. Okay, well, let's take a short little break. When we come back from break, we're going to talk about the Wolf of Wall Street and our portfolios. We're going to talk, and then we're going to talk a little bit about the papers you all have done. And then we'll do one final thing to wrap up the course, and we'll move on to bigger and better things. And you'll never see Professor Hasse wearing this stupid headset and talking into this internet anymore, unless you're taking my finance course this summer. Anybody taking my finance course this summer? Good. Take a break. Relax. Okay. Let's take a 10-minute break. Smoke them if you got them, and I'll come back here at 10 minutes after the hour, and we'll spend another hour doing some other things. Okay? All right. Let's take a break. Okay, we're back. You should see on your screen the disaster that we call Professor Hasse's portfolio. And this is what I was looking for in your postings, and all of you did much better performance-wise. But some of us still got some points marked off in the grading of this portfolio for this past discussion forum. But this is what I was looking for. Naturally, as you can see, my portfolio increased by roughly about $1,100. So I had a 1.1% gain from the time I started our portfolio, March 31st. There's my original investment. There's the original shares, the original price, to what is happening this week. I had a nice hit with Apple, but it was a dog with fleas with General Electric. And that combination made me only make about a 1% gain on my portfolio. Now, did I keep up with inflation? Yes. Over the time span, and our annual inflation rate's about 3%. I made 1% over this time period. I did, that's nothing. I didn't lose any money, so that's nothing to be ashamed of. But in relationship to the markets, the Dow, the S&P 500, and the NASDAQ, three areas of different ways of investing in the market. The top 30 companies in America, according to the Wall Street Journal. The top 500 firms in America, according to the Standard & Poor's company. And the top 2,500 or so firms, small and medium-sized companies, according to the NASDAQ over-the-counter exchange. Those, over the course of this time period, the Dow, 7.8%, the S&P, 10.4%, and look at the NASDAQ, 16% return. If I would have bought into a mutual fund or an ETF that invested in the NASDAQ index, I'd be up 16%. I wouldn't be able to equal some of you. Cecilia made $21,000. Kristen, Miss Traber made $17,000. You guys did pretty well. But the person who did the most, holy moly, We'll take a look at that in just a minute. But this is what I was looking for. Your change, your current value at the end of on May 14th, the change in your portfolio from the beginning, and the change of the indexes, the three market indicators over the course of our time period, March 31st to May 14th. And as you can see, then you compare those to your performance. And in the case of mine, I didn't do very well. Well, who's our Wolf of Wall Street winner? Well, if you remember, when I hang on, when I gave you our agenda for this week, or is it? Our agenda was a little picture. And on that picture was our prizes that were going to be given to the Wolf of Wall Street for this course. A University of Laverne pennant and a Starbucks gift card. Expense is not even a question in this class. Money is no object. So our portfolio winner was the University of Laverne pennant in the mail and a Starbucks gift card. Well, who is that? Who is that individual? Well, let me bring this up here. Mr. Sergio Anchieta. Mr. Sergio made $46,163. Holy moly, who in the hell is this guy?
Should we clap?
We should clap. Cheater, cheater, no. Sergio, 46 pops. Unbelievable. And we're going to call on Sergio in just a minute to give us his expertise in this regard. Sergio invested in two entities, a gold firm and a silver firm. He went to the commodity markets and bought equities in companies that dealt with commodities, or not commodities, with metals. And so Sergio, could you open up your mic and get online with us, please? There you go.
Yeah.
You have a camera we can see you?
No, my camera is not working right now, fortunately.
Sergio, talk to us about how you made $46,000.
Well,
What's your secret?
I think it happens all the time, especially in economic hard times, that people run towards precious metals, monetary metals like gold and silver. Especially right now, I think silver, especially silver, because I believe silver is very undervalued, and I think gold is definitely gonna blow. And once that blows, I think silver is gonna be pulled with it. So I think right now, it's the best time to buy silver right now because it's really cheap.
Mm-hmm. Sergio, I know now naturally this started on March 31st, so we were into the pandemic. So when you decided to pick your stocks way back in March, you went under the knowledge of what would do well in this economic hardship, correct?
Correct, yes.
And you went with naturally some things that gold is going. Good thing you didn't buy oil. And so that's smart. That's very good, Sergio. I'm very impressed. Do you own these in the real world?
I do own gold and silver, but I don't have gold stocks. I don't have ETFs either, because I believe that you should own your physical monetary metals, because a lot of these times you don't know if they actually have the gold and silver that they're selling, you know?
Right.
So I think the best thing to do is to store it yourself.
How do you buy? Do you use online trading, or do you go through a broker?
I go through a broker. It's called MX.
Mm-hmm.
Or sometimes you can get a pretty good deal on eBay as well. Sometimes.
Yes. Okay, good. Anything else to tell? If you were starting a new class this summer in a couple weeks, the 1st of June, where would you invest in a portfolio for that class? Same stuff?
I would think so. I think there's a lot to grow, especially in the silver. That's very undervalued. Like even throughout history, like right now the silver to gold ratio is like 112 to to like 1, you know?
Uh-huh.
So I think it's very manipulated. I think there's some characters in the background manipulating those prices, and I think it's more closer towards 50 to 1. So I mean, there's pretty a good amount of money to be made once those prices go up. So I mean, especially now, especially with all this printing, it is also a good way. It's a hedge against inflation. You know what I'm saying? So if you own gold or silver, you can eventually once you can sell it later for the inflated price. You know? So that's my
All right. Well, Sergio, I'm gonna take you up on that because I'm starting a finance course at the beginning of June, and I don't know if I'll invest in these exact same entities, but I'm gonna take your advice on that, and I'm gonna play that game come this summer. So I appreciate your expertise and your advice, and this has been this isn't the world record for a class, but it's pretty close to the world record of most earnings in a class. Very impressive. So nice job, Sergio. If you could send me via email your mailing address, and I'll get that stuff out to you next week, okay?
Okay, sounds good. Thank you, Professor.
So everybody, Sergio Anchieta, the Wolf of Wall Street for Business 493, and he goes on the Hall of Fame. You can't see it here in my office, but on the wall to my right is the Wolf of Wall Street Hall of Fame. And I'm telling you, you can win an Academy Award. You can win the MVP of NBA. You could be Warren Buffett, but there's nothing more of a being an honor as being on my wall in my office with the Wolf of Wall Street next to your name. Sergio, you should be humbled by this, and I congratulate you again.
Thank you very much.
And
Thank you.
wait a minute, I need okay. I always get a tear in my eye when I do this. I get so emotional. It's just something that's it's tough to take, but I can handle it. I'm a little emotional over this, so bear with me. It's it's tough. It's very emotional. All right, let's move on. Enough of this nonsense. Okay. All right, now let's go to this area here. Let's open it. Okay, now I want to go around our class, and I know I'm not going to try to embarrass you, but I want to look. This is our last class, so everybody should participate. All right, Sergio has participated, being the Wolf of Wall Street, but I just want, as you now have posted or will be posting your project papers, I'm going to go around the classroom here via Zoom and talk a little bit about, just give me a little bit of a feeling about your experience with writing this paper. Nothing major, but just what you can tell me. So let's start off here with Anthony. Anthony, where are you? Anthony, could you turn on your mic, please?
Yes, I'm here.
Anthony, what did you learn from doing your paper?
So my paper was basically about how to obtain a loan.
Uh-huh.
And so I went through the backgrounds, and a lot of it pertained to, what you've gone over in class. Just basically, your FICO score is really big. What else did I learn? Just more of how to go about it. I know the difference between unsecured and secured loans, and just basically the steps to take and do your due diligence before you apply for anything. And that's pretty much what I got.
Anthony, would you borrow money now to buy a home?
I would.
Okay, very good. All right, thank you. Ms. Carrasco, tell us a little bit about what you learned from your paper.
So the reason I picked it, first of all, was because we're looking into buying a home. And I wanted to learn about the different types of mortgages. And it was very helpful in seeing which types of mortgages are more ideal for specific people pertaining to their financial stability or whatever it is. I wasn't aware of a lot of the types of mortgages that I looked up, and I was really interested in a few of them. But I mean, the one that I really would go towards right now is adjustable, the variable rate, just because they give you a lower fixed rate, for a certain amount, say a 10-year term, and then if you leave before that, then you won't have to pay that variable rate after. And I mean, my fiance already owns a home, so we would do it under me, or else we would have to go under a different type of loan.
Is there anything scaring you about looking at home buying now,
Um,
or making you concerned? I should say
looking
scared.
looking at it is always fun. I wrote I wrote about that in the paper. It's the best part, you know, looking around. Actually doing the purchasing right now, it is scary. We're not looking into doing it right now, but we are starting to look at like process and like what to do, because his home is in Illinois, so it's a different process. So
Are
we
you
were
go,
buying in California.
are you going to go live in Illinois down the road?
Down the road, we're looking forward. I really like Wisconsin, education wise for child development. That's my major, and
Yeah.
I really, really like it. And so I'm looking more at Wisconsin later on, down the road.
Miss Carrasco, have you ever shoveled snow in a sidewalk?
I have,
All right.
but
You got to
I
think about
wouldn't be,
that.
I wouldn't be doing that. My fiance would.
Okay. Well, good. Thanks. That was a nice report. All right. Great. All right. How about Christina? Christina, where are you? There's Christina. Christina, turn on your microphone.
Hello.
Hi, Christina.
Okay, so I did my paper on credit card fees.
Uh-huh.
I don't own a credit card, so I was interested.
Hold it. Time out. You do not own a credit
No.
card? A
No.
freak of nature.
I'm just nervous because my parents, they always told me just to be careful, and I wanted to do research on more on the fees and how they charge. So, and it's pretty expensive. The interest and the credit cards are, yeah, I wouldn't own one.
So in the foreseeable future, no credit cards in Christina's future.
So far, not right now. Maybe as I get older, but
Good for you. Now, Christina, you don't have to answer this question. How old are you?
I just turned 30 this year.
And you don't have any credit cards?
No.
Wow. God
My
love you.
parents just taught me not to own one, and it's because my brother, he actually they owned one, and they owe quite a bit of money on it. And they
Yeah. Okay. Well, I'm glad. So you got some value out of doing this then.
Yeah, so it was interesting to see all the fees they charge you and how they actually entice you into buying one with all their promotions and everything.
Oh yeah. Tell me about it.
Yeah.
Okay. Well, that's good, Christina. Good. And that's great. If you can live that way and manage your finances that way without credit cards, that's wonderful. You are in the minority. So that's good. Victoria, I know with your situation, can you give us a comment on your paper or not?
Yes, I can.
Okay.
So my topic was discuss the importance of workplace diversity acceptance and
Yes.
producing a healthy and productive work environment.
Mm-hmm.
So I chose that because right now in the pandemic, I think that's going to be a huge factor later because we're going to need more ideas.
Mm-hmm.
And diversity brings within different cultures, different religions, and they have different ideas so they can bring to the table. That's why I chose it.
Very much so. Very much so. Well, that's good. Good. So you got some value out of it.
Yes.
Good. All right. Ebony. Ebony kind of picked the credit topic too. Ebony, can you turn on your mic and tell us what value you got out of doing your paper?
Hello. So I did do pitfalls of credit cards, and I am one of the people who have credit cards.
Listen to this, Christina. Listen to this.
So I am in my 40s. I am actually 42, and I have, just like everybody else, I have 4 or more credit cards.
Mm-hmm.
And they were saying when I was reading this and writing my paper, most Americans have 4 credit cards or less, and most Americans right now have at least $62,000 in debt. They're at least $62,000 in debt. So it was good for me because also to share, to be personal, at one point I was going to go ahead and file bankruptcy too, because I had got to the point where I said the debt was just overwhelming me, plus the school loans too.
Yes.
So, and me and my husband, we have a house, we have a condo. So it's a lot, you know. It was very interesting to know that all the credit cards are not the same, which we don't know. A lot of people don't know that you should not take out department store credit cards. It was a lot of good information.
Well, good. And that's part of the reasons why this is a good class, not only for Christina, who's just beginning her understanding and use of credit, is for somebody like you, Ebony, who's used credit, good or bad, has learned from it, and can try to manage it better. And I think that's a good thing, Ebony. And hopefully this will help you manage it better, right?
Oh, right. Yes, definite. It was a lot of information. I actually already have worked everything out before this, but I said, wow, I wish I would have known this, let's say in my 30s.
Yeah.
Because I could have, did some things different. I think I personally would have only had one credit card. I think I only had one or two, maybe two. And that's about it. Really it's best to use cash if you can, especially for little things, and I was also, my paper discussed it. Most millennials, we charge everything. Ice cream cone, piece of gum. Oh, let me get a water, Starbucks. It's just easier. It's faster. It's convenient. Then you don't think about, okay, let me transfer the money over. And then when it's time to pay, you don't pay the full amount. You pay the minimum.
Yep.
And that's where you fall into the pitfalls of debt.
Exactly. Very good. I keep telling the provost and the dean of the College of Business, and I keep telling they should offer this class to incoming freshmen as mandatory. Incoming students into college when you're 18, 19, 20, 21, 20, whatever, however old you are, one of your first classes should be understanding personal finance, understanding loans, understanding student loans, understanding all this. That would serve the students so much better and give them some good knowledge as they go forward throughout their education. I have so many students coming up to me these days who are getting their business degree and graduating this next couple weeks, going through the virtual commencement or whatever that stupid thing is. And all of them are saying, Professor Hasse, I think I'm going to go to graduate school. And the next question I have of them is, how are you going to pay for that? Well, I'm going to take out more student loans. Are you friggin' crazy? Do you really want? Yes, getting a graduate degree is wonderful. It's great, but you're going to lose the value getting that degree by taking on more debt that you're going to have to pay back many, many years down the line. That is creepy. And well, explain that, Mr. Hasse. No one told me about that. Really? So that's where these classes are very helpful. And I still think they should offer this class in high school, or these types of classes in high school to students. That's very important too. Okay, thank you, Ebony. Very good. Edmund, tell us about your paper. Edmund.
Hey, what's up, everybody? Yeah, I chose mortgages, also interest rates, closing costs, and stuff like that. But what was on my mind is what Ebony just mentioned about credit cards, and I wish I would have been a little bit sharper, and I would have taken a course and figured out how important credit is and why I need to protect my credit and how to have the right balances in proportion to my debt and stuff. But so I started actually in loans, 2005, 2006. So in I guess I contributed a little bit to the not the best loans. These are the option arms, the NIGAMs, the stuff that got everybody in trouble. But this was the stuff that the broker sold on us. But anyway, I decided to circle back on my paper because I read something from the California Association of Realtors. I think it was actually National Association of Realtors about forbearance. So because of this whole COVID thing, these homeowners are allowed to call their loan servicing company and ask for a period of time that they can hopefully postpone their monthly payments.
Yes.
So I wanted to, I wanted to include that. But the more I looked into it, it seems it's pretty challenging for a homeowner right now because the only option provided by the servicing company is to do like a lump sum.
Mm-hmm.
So you can postpone your payments for like, say, 60, 90 days. And then after that period, that lump sum is due. And that really doesn't help anybody.
That's brutal.
So, yeah, that's super brutal. So, but it turns out that there's additional options for owners if your loan's like FHA or VA or Department of Agriculture, anything that's government backed. So it's this is the non-conventional stuff. So I just wanted to incorporate some of that, but yeah, you know, what you mentioned about taxes and preparing for taxes has made a big difference in how I'm approaching all of this stuff. You know, so it's not really maybe how much you make, but it's how much you save and plan to save and prepare for taxes and also retirement and all that stuff. But
Okay.
yeah.
Well said, Edmund. Thank you. Excellent. Veronica, tell us about what you got any value out of your paper, Veronica.
Doing my paper on retirement plans and investment opportunities in your first time, your first job. So I've been with my employer for about 11 years. And when I started with them, I didn't even think about doing my 401k. So I started off like within the 2 years in, I got into 401k, and I wish I would have done a lot more and invested a lot more of my money into that. And so, and then I wanted to see about the IRA contributions and the stock options and certificate deposits as well, to see if I could be able to invest some money into those things.
Okay, good. So you're going to take a little bit different outlook at your retirement, maybe start putting some more money aside, correct?
Hello?
You're going to start putting some more money aside in your retirement, Veronica? Okay.
Yeah.
Okay, good. Veronica's breaking up a little bit, but that's okay. We got the crux of your paper. So thank you, Veronica. That was good. I'm glad you did that because
Oh, I don't know. Can you hear me?
we can hear you now, yes. You keep going in and out. So I think we got the idea. Thank you, Veronica. Very nice. Appreciate that. Cecilia, what did you get any value out of your paper, Cecilia?
I chose to discuss the importance of workplace diversity, acceptance, and producing a healthy and productive work environment. I've been at my job for 22 years.
Wow.
So my workplace, I've seen it change from when it was a very Latino-based employee company to my department alone has multi differences. There's from ages to, I've seen people starting there. When I started there, they are now retiring. So I've seen this whole cycle of not just culture, but also the age difference in how the older help the younger, and they bridge that gap with the new and the old ideas, which our business is manufacturing machinery. So it's given a lot of leeway for the company to be competitive in the field for food machinery. I've also myself have learned a lot from the older generation at my company. So it's just not the culture, but there are a lot of, there are some disadvantages of it as well. You have the language barrier, which me, myself, being half Caucasian and half Latina, I've learned Spanish, not only from my boyfriend, but from everybody who has helped me learn it there. So I've learned a lot from a whole lot of people there, which I am very grateful for.
Is your company growing, Cecilia? Are they doing well?
They're doing good. They have their lulls where it gets slow, and it's always the same time of year. We make food machinery for tortillas and tostadas and everything. So it's always that type of year. Around Christmas, we get busy, and then we have a lull for a couple of months after because, you know, Latinos are not gathering to get all those tortillas and chips. It is what it is, because that's what we go for, right? And we make, you know, it's just the time of the year, and we are doing pretty good. But as far as like our research and development, the gathering of the different
I see it in my department alone in engineering, as far as we have, we call ourselves hybrids in my department, because we do have people who are like me, Caucasian and Latino based ethnicity. And then we also have a gentleman who is from India. We have a Filipino, we have Mexican, Caucasian, and the mixture of it all. You just see the different thinking of problem solving, and we all have to learn. You just have to be thrown in together, like that melting pot theory.
Yes. Yep.
And it just, people start to tolerate each other, and we start to understand each other's differences and accept them. And I see it out on the floor too. You would be amazed with how Central Latinos, just because if they're from El Salvador or from Honduras, like my boyfriend is, there are just differences, and it's not just, and there's different dialects as well. So yes, there can actually be a language barrier between and within a culture. And people just don't realize it. Just like in Mexico, there are different dialects, so it just all depends. But how the management deals with it is a different story. They need to be able to understand all that in order to resolve the issues that happen between them and the misunderstandings. And I think that's where human resource comes in.
That was my next question of you: is management recognizing this, and are they taking the appropriate strategies and understanding this? That's a big issue, and that's.
And it's funny, my upper management, the owners of the company are not just Latino; they are Latino and Middle Eastern descendants. So it does help them a little bit to understand that there are a lot of different cultures and whatnot, and they bring the cultures in, and they accept, they love it, because we're all talking about it. Oh, what do you do at yours, or this? It's great. It's like a big family at my company, and it's a lovely thing. But there are some disadvantages.
Yeah, but you're very fortunate to work with a company like that. It's diversity is an acceptance of different types of cultures in a workplace. It can be a very difficult thing, and I know as a former manager and owner of a company with a diverse employee base, even though I only had 17 employees, I had to train myself and understand that. And that was a big learning experience for me. So it's management's acceptance of that and understanding of that is key to make that all work. Can I ask one last question? Are you unionized in your business?
No, we're not.
Okay, because that has a lot to do with that too. Usually unionization speeds up that process in many respects. But I just wanted to ask you that question, because sometimes that plays a difference. Is your company a union shop? That can be.
They're not a union shop. The human resource is pretty strict. They are in the last, I would say, 8 years have gotten pretty more streamlined with policies and training people in management as well. I used to be a supervisor, so they do train the management a lot more than they did when I first started there. So
last question, and I don't want to sound like a CNN reporter. Are women paid equally to men in your organization?
As far as me, for what I know, I pay, even just against the engineers and how many years I've been there, I'm pretty equal with them.
Okay, that's good. So that's good, because that's a touchy subject with me. That's good. Good. Sandy, tell us. Thank you, Cecilia. Sandy, tell us about your paper experience and what you got value out of it, please.
I did my paper on designing an investment portfolio, and I kind of took it from a point of maybe a first-time investor, like a 30-year-old, someone young. I figured that, recently out of college and starting their career, and is just beginning to invest. And what I learned is kind of what we've talked about, that you don't have to be rich to invest, which is good. But also some things I learned was the difference in investment broker and a financial advisor. Which I didn't really know, that an investment broker they operate under a know your customer standard, I guess. And then a financial advisor has more of a fiduciary duty, so that they are obligated to put their clients' needs first. So I thought that was interesting. I didn't know anything about that. And that a broker cannot invest without giving you the approval, and an advisor can, as long as, you know, they can go ahead and invest in, you know, for you. So that was something I didn't realize there was a difference. And then, you know, also just looking at how you could basically start, if you wanted to be very conservative, you could start by, like we had talked about, the treasury bonds, by, you know, $1,000 bond, and then take the $30 that you would, you know, earn every year. And I mean, if you bought a bond every year, that's $83 a month, you know, you put away, and you'll have $1,000 a year, and then you know, could be buying, you know, so, and then just reinvest your dividends. And so that you could slowly have a portfolio that you could build on. So you don't have to be, you know, very wealthy to have any type of investment portfolio. I think in my mind as well, you know, I always think investment portfolio, oh, that's, you know, got to be something huge. And it doesn't have to. A portfolio design, it can be for any person, just trying to find out what their style would be. And that would be the first thing is, you know, are they conservative? Are they, you know, hey, I want it to be all stocks, and really just trying to find out where they would be. And then you can basically design an investment portfolio for anybody. So yeah, it was fun. It was a fun paper to write, to learn more, because, you know, I've always thought about, oh, that would be kind of cool to do. And then especially after we had our mock portfolio, and just seeing, hey, I did pretty good, you know, in the couple months. So anyhow, I thought it was very interesting, and it was fun.
Great, Sandy. That's a good report. Thank you. I think one of the key things to any retirement, and you just said a key, you don't have to have a lot of money, but you have to understand where you want to get to. Where is this, even though it's a small amount of money, where do you want to go? Is this for the long term? This is retirement, or are you using this as a savings vehicle for a house or whatever? And that's important to set that strategy. And you can change strategies over time as your life changes. But it's always important to understand what you're doing, why you're doing this, what is it for, and that's an important thing. Good, thank you. David Laura, tell us about your value from your paper, please.
Yeah, so I did my paper on the pitfalls of revolving credits. And I focused on the three main things that affect your FICO score, which are the amount owed, your payment history, and how many lines of credit you have.
Very good.
Yeah.
How you personally feel? You feel you're in good shape?
Personally, yes. I've been working over the last few years to improve my credit score because I had a really bad score from my 20s. I just maxed out all my credit cards, went into collections, and ruined everything. So I've been really working to get that back up.
Good. And how are you feeling going into these changing economic circumstances? Are you in pretty good shape in your opinion?
I think so, yes.
Good. All right. Good job. All right. Thank you, David. I'm glad that gave you some value. Sergio, Mr. Wolf, tell us a little bit about your paper, Sergio.
I picked the diversity at the healthy diversity at work.
Yes.
And I think it's very important to have a mix of individuals at your work, so you're able to have a mixture of ideas and work ethics, you know, especially when it comes to problem solving, and especially moving forward, especially as, you know, as the world becomes more globalized, you know, and the world becomes smaller in a sense, you know. And then one of the interesting things here that I learned in my research is there's like over 200 languages spoken just here in California alone.
Exactly.
You know, so as trade and as people tend to move around, people are going to have to learn how to work with different groups of people, you know, and learn how to get along with one another. And it's really interesting how a lot of companies, like especially like Google, are setting up departments where similar to HR, but it's a diversity department where they help individuals that come from other countries kind of assimilate into the culture.
Wow, that's wonderful.
Yeah, so they have like pamphlets, and they have they also have like surveys there as well for the employees to see how management is treating their employees, and they can come in and without them being afraid of any retaliation from the superiors. So it's really cool how companies are bringing people together more than ever now.
Good. Sergio, are you a manager at your company? Are you responsible for people?
No, I am not. No, but
Okay.
I've been offered a couple of times the management position, but I've turned it down though.
Down the road though, maybe, huh?
Oh yeah, for sure. Yeah, once I'm done with school, I just don't want a job yet. You know,
Yeah.
that's a job, and I'd rather just concentrate on my schoolwork.
Good for you.
Mm.
All right, Sergio, thank you. Thank you. That's great. Jacob, tell us about your paper, sir.
Sure. No problem, Professor. Well, for me, I didn't really go the money route. I focused mainly on like what could I do with my degree in history.
Yes, and we talked about that. So you tell everybody you're a history major, correct?
Yes, I am.
Okay, so go continue.
All right. And I basically wanted to look at like what type of jobs could you get with a history degree. And through my research, I was able to find that you could be like a history professor or a historian or a museum archivist, or but you would need like a master's degree in history, right? Yeah. So that's basically what the gist of my paper was.
What type of job would interest you as a result of your studies of history?
Historian, actually, because I actually have a good memory for memorizing dates and facts, mainly pertaining to TV and film. So
Very good. Okay. Are you a good writer, Jacob? Are you a good writer?
I would say not so much. I would say I'm a good writer, but I wouldn't say like I'm a great writer. I'm a good writer.
All right. If you're a good writer, that's a step forward. I'm a terrible writer, so that's something where I know I've always been weak on. All right, Jacob. Well, thanks. I know Jacob's like some of the other students in this class are from totally different academic backgrounds that have nothing to do with finance, and I think that's a good thing. I mean, you're seeing the aspect of business or finance in your life, but at the same time, as Jacob did, he kind of correlated that with where he wants to go with his degree, and I think that's a good thing. So, Jacob, thank you very much. Excellent. And last but certainly not least, Mr. Navarro. Tell us about your paper, sir.
Yeah, so I did mine on, I think I only heard one other person did designing an investment portfolio. And I did mine from the perspective of a non-professional. Coming from my experience, like when you hear the words designing an investment portfolio, it seems so esoteric and daunting because of all the terminology, the numbers that come into play. So I wanted to kind of strip it down and make it as understandable as much as possible. Just kind of learning like how to assess your benchmark, how much you can invest, smart decision making, just kind of allocating funds. And I took a lot of like what we've learned here from this class. The investment portfolio did, although there's a lot of investment products out there. I did mine just solely on stocks, just to kind of simplify it and just kind of learn how to manage it and how there's ways for us to be able to do it on our own without really the help of like a professional, because that's not always feasible for everyone, because it can be expensive. So yeah, that's kind of what I did.
Carlo, would you ever consider doing online trading?
Yes, although I have not dabbled.
Okay, well, that's something that down the road, that's how do you keep it cheaper. And you can use the information and the study in finance like we're doing here as a basis of getting more information and do that. So that's good.
Yeah.
Well, thank you, Carlo. Excellent. All right, well, we're going to wrap this up with one last thing. And I'm going to use technology here. And again, this is just for you and I. It has nothing, I'm not going to share this with anybody. I've put together a little poll that I'd like you to fill out. Pick one of these. We're going to do a real-time poll here. And you should see on your screen, here's a question. Personal finance is, and then I want you to pick one of these. It's a multiple choice. You can pick personal finance is necessary to incorporate in my personal financial management. I would rather have something else, someone else handle my personal finances. Something I will get to in the future. Personal finance is not necessary for me. Personal finance is fun. That's going to be a stretch. And personal finance is scary. That should say scary. So I want you to pick one of these. I think there's 11 of us here tonight, or 12. See if you can pick one. Pick one of those multiple choice ones that you think would answer the question for you. Personal finance is. And everybody's thinking out, wow, look at this, 100% necessary to incorporate in my personal financial management. Wow, well, there's something that I will get to in the future. Very good. Fun. Boy, I'm in the business and I don't even think it's fun, but that's good. You think that. That's good. All right. Well, I thought this was kind of fun. And let me show this here to you. And here are the results of that poll. So as you can see, most of us, 11 out of 13, 85% would personal finance is necessary. And that's a good thing. That means I kind of got the balls rolling inside your head to start looking at this and getting active in it. And that's good. So I thought this was kind of a fun thing. I'm not going to send this to Patty Noreen and have her ask you for money down the road or anything like that. Don't worry about that. But this is just something interesting that I like to do with my classes at the end of the class, and just get an assessment by the students about the class, about what they got out of it, or how it changed maybe their thinking. And this is good. So thank you all for sharing that. That's kind of fun. That's good to know. And this poll is kind of a result of what some of you said in talking about your papers, is that this has been helpful in you getting better prepared in the workplace, prepared in your retirement, prepared in your investing, just prepared to managing your money better down the road, and knowing where to ask questions and when to make sure you know what's happening. And pay attention to those taxes. I can't stress that the most, about understanding your taxes and what you're doing about it and how that affects your personal situation. So that's good. So thank you all for doing that. Well, as I wrap up the course here, the 8 o'clock hour, I want to thank you all for doing something that is above and beyond the call of duty, is changing in midstream to take a class that a lot of you probably were very apprehensive about, and being able to sit at home and look at a screen and try to interact with the professor when instead he's 5 feet from you in a classroom where you can get a feel for it. I think you all have done very well. And I think one of the reasons why I just enjoyed, I'm going to give you a paid political announcement here. I'm sorry. One of the reasons I enjoy teaching at Laverne is our students come from so many different backgrounds, so much experience, family, cultural, social, professional, and you all adapt. You are adapters. And that's where you'll be successful in your career. When things happen like this pandemic, or when things happen when a member of your family passes away, or when things happen when you want to maybe go get a master's degree, or you have a child, or somebody gets sick, you use education, you use your experience in life to adapt. And when you do that, you have the confidence to make the decisions and the strategies. And then but also more importantly, you feel good about yourself. You feel good that I can do this, I can manage this, I can make that decision, or I can understand what I have to do. And that's what education is all about, to plan you to do that. And I know that sounds corny, but that's what employers look at. That's how are you going to be successful in your career, is you adapt, you change, you understand, you work with other people. And I think this is a good thing for you to do, to experience a class like this in this type of platform. Yes, I agree with you. This would not be my cup of tea term in, term out to do this. but I think this has been good experience. And I know some of you are taking classes this summer, and take that attitude into your classes this summer about how this is adaptation, this is learning, this is a change. And a lot of us don't like change, but we change. You have to change. God, I can think about all the things in my life that I've had to change and adapt. It's an important thing to do. So I want to thank you all for doing that and managing that and dealing with that and being very successful in this. And I thank you. And I urge you all, remember, I'm part of your network. I've had Carlo before in class, but I'm part of your network. And if you have situations where you need help, advice, information, please feel free to call on me at any time. I'm going to be at Laverne for a long time, and I'll be around. So please feel free to do that. I would be more than willing to write letters of recommendation. I'd be more willing to give you sources of point you in the right direction for information. I probably have to, at the end of this portfolio, as you can see, you don't want my investment advice. I'll tell you that right now. You guys all beat me. You don't want that. But I think going forward, anything you need, you're going to be very successful. And please feel free to use me as a network and as a resource. If any of you use LinkedIn, I'm on LinkedIn. I do a lot of work with LinkedIn to help students. So take advantage of that. So if there's no other final questions, I wish you much success. Take a couple of days now and relax and not have to worry about getting strange emails from me or videos. You've done very well, and I hope to all see you down the line, and I hope to see you at your graduation, however shape or form that may be, and I wish you all the best. So thanks, everybody, okay? Thank you very much.
Thank you, Professor.
Thank you, Professor.
Thank you.
This is awesome.
Thank
All right.
you.
Thank you, Professor.
Thank you, guys. You take care.
You too.
You too.
Do your evaluations, don't forget.
Thank
We're
you.
going to receive an email for that, right?
I
No,
think
you
you
just-
I think you already got it.
Or if you have the app on your phone, like the Laverne app, it's right
Yeah,
on.
it's on your app on your phone.
It says right away, like do your.
you-
I got the email already, so it's
Yeah.
already done.
Oh, I'll have to check.
If you don't have a link or anything, let me know and I'll send it to you. Okay.
Okay, sounds good. Thank you.
All right, guys.
Thank you.
Bye.
Thank you.
Bye-bye. Bye-bye. Take care, Edmund. All right, that's this class, everybody. This is Professor Hasse signing off. Business 493. Adios.